Good morning, traders. Today is June 1st. Welcome to the start and kickoff of June Trade. Francis, Eileen, Gary, Mark, Pooja, Rick, we got a packed house here. Good to see everyone this morning. So, first day of June Trade, and we are getting some near-term plays here. A breakout on the Kiwi dollar. You had a breakdown on the sterling. We talked about that last night. Dollar yen breakdown, euro pound. Near-term breakout to the upside. Kiwi, like I said, looking for, actually that's testing confluence resistance on that breakout initially, so want to use some caution there. We'll take a quick look at the Aussie CAD bounce and dollar CAD. As always, guys, questions or trade setups specifically that you want to follow, feel free to throw them on the message board. Quick look before we jump in at relative dollar performance. So we did technically get a close above 11,989 yesterday, but wasn't too convincing, right? And in fact, on the near-term chart is really what gave us a little bit more confidence that the downside bias may still pan out. Remember, you're coming into the underbelly of former trendline support, lower median line parallel, now resistance, and the 100-day moving average. Now, a near-term price action, if you guys recall, I tweeted this chart last night, and we noted this yesterday in the webinar, that a near-term formation off the high here, just within the confines of a 30-minute chart, had that upper median line parallel like embedded with the 100-day moving average. And as long as we stayed below that, it's still kind of like in favoring the downside bias here in the index. Here's what it looks like on the 30-minute now. All right, so you can see that 100-day moving average still dead heat with the upper median line parallel, and even on the lows that we're making right now, still more or less broadly in line with that median line. So again, don't want to put too much emphasis on this formation just yet, but initial reactions are starting to look pretty encouraging. So no changes on that. Same levels in play here. We're going to continue to stick with this for now. Broader downside bias remains in play below that 100-day moving average. This is a simple sliding parallel for the current operative slope that we've been in. So if we close today or if we push below that, sort of validates the broader breakdown that we've been looking for, a near-term reversal. Any questions on the dollar index? Remember, guys, there's still, that might be even a little bit cleaner, there's still a big week of event risk on tap. Okay, we have the ECB tomorrow. We got the ADP report tomorrow. Heading into the end of week, obviously, you have non-farm payrolls. Just a reminder, after the webinar today, we do have ISM data coming out at 10 o'clock, and we'll take a look at that. But there's a lot of event risk on tap that could really charge some major moves into the June opening range. So it'd be a little bit more nimble here still as we get those first few days under our belts. Adam, great to see you in the room, man. Good morning to you as well. All right, any questions on the index? Again, looking at this relative performance for the session so far, you can see it's broadly stronger against most of its major counterparts, the yen being the biggest winner here, up 1.33%, but the dollar really losing its footing against all of the majors. Sterling coming off a bit. We'll take a look at that trade as well. Saw a breakdown of that upside trend in near term, so still think you possibly have some more downside to go there, and we'll cover that in a moment. Any questions on the index? A quick look before I close out the terminal here at the upcoming U.S. data. Here's what the ISM manufacturing data looks like at 10 o'clock. Again, you're looking for the headline print to come in at 50.3. So again, still on the expansion side, but certainly slow in the pace of expansion. Prices paid expected to drop to 58.5. Okay, every data print in this month is going to be critical because as you head into the FOMC policy meeting, you know, all the incoming data is essentially what they're looking at to flip the switch on whether they're actually going to raise rates this month. Again, my humble opinion, they possibly won't do it this month. If anything, maybe next month. That's certainly what Fed Fund futures are showing. And here's what the update looks like. I checked it this morning, guys, no change. Okay, it's exactly the same. So markets are pricing in a 24% chance for June and a 53% chance for July. This is still off from last week's high of about 33. We left off the week at 30%, and here we are with the dollar. Interestingly enough, the dollar closed up here yesterday while this had dropped, which gave me a little bit more comfort in that although we closed above 11,898, you know, the fundies, as it were, quote unquote, is changing, right? So a 6% drop in the probability for next month. Price was still at a high. Like to see that continue to move lower. Okay. Moving right along. We'll continue to watch that data at 10 o'clock. And then obviously later today at 2 o'clock, we get the release of the Fed's Beige Book. That's the updated assessment on the 12 districts. Ahead of that, you'll have, guys, the midweek strategy webinar with Jamie, who will be on at 1 p.m. Eastern. So give you a nice little preview of that as well. Not really expecting anything major out of this unless there's some sort of deviation in one of the districts. You know, everyone's basically on the same pace right now. Okay, let's jump into the meat of it. First on tap yesterday was the Kiwi dollar. So I know that the swing trades are out of this position at this point, but we just rallied right into the yearly open, which also converges dead on with the lower median line parallel. And this is the exact sort of scenario that we talked about yesterday. So we highlighted this in basically on the daily chart here. That confluence was perfect for today or tomorrow. So here we are knocking on the door right now. This is the initial resistance. You'd expect to see a little bit more of a kickback. If we break through this, you're essentially looking for the high day close from December that takes you into 68.66. And above. You know, this is sort of a major pivot in my eyes that would be looking at for the Kiwi. Near term, here's what it looks like. Okay, so you saw a topside break of the upper median line parallel there. A basic retracement off the high gives you a 38.2 at 68.18, and the yearly open was at 68.27. So this cushion area right here also has that lower median line parallel, which is why for me, long exposure from here, I'm not even looking for it. I do think you get a pullback and you possibly see a stretch higher for sure. You'd be looking for 68.66, like I said. 69.07 would be a nice clean 618 off the high. But the immediate topside bias heading into the open at 68.27 or sub 68.27 is at risk. So if we get some turning here, if we get some divergence into the high, which we're getting right now, a basic retracement and the area of possible long entry again. Again, it's too early for this high to be something substantiated, but takes to basically into 68. So you look for a pullback towards that 68 level, see if you can find some long triggers and momentum. I'm, again, just highlighting the divergence that you got into resistance. So I'm not really excited about playing the shorts. I'd rather look for a pullback to get on the long. But near term, be wary of this. You're at resistance as it stands right now on the Kiwi dollar rally. Worked out real well with the breakout here materializing as the dollar index was failing essentially at a key resistance range. So I like the change of behavior. I like the breakout type play. Look for the pullback here to give you a little bit more of a substantiated bounce in Kiwi dollar. Any questions on Kiwi? Really quiet week for data. So we're just going to want to focus essentially on the dollar price action. There's not really much on tap. You do have the RBNZ early next week, and that'll definitely be a major market player. But as it stands right now, it's going to be all dollar. So Nazia, I'm sorry, I just saw your question there. Did you get that answer? So I'd be looking for a retracement into the U.S. Open if this breaks to the downside on a U.S. opening range break to give me like a basic 38.2, a basic 236. The thing you're looking for with this, Nazia, is you're looking for structure. It's the only reason I haven't really gotten involved in this yet. I loved the breakout and the close yesterday. You know, we talked about it in the report. It was a clear breakout as the dollar was at resistance. Nice change in momentum. But you look for structure on it to get you a little bit more, relevant entry areas. Yeah, I don't have anything on this that I'd be comfortable putting too much emphasis on. But what I was saying earlier, I don't know if you got it or not, was a basic retracement off the low. If we get a turn here lower into U.S. trade, would have me looking at just a basic 236.38. See where the strongest pivot in. Essentially 68 would be the first area, 67.70 would be a nice pivot in price if you look here. Caught that high last week, and is actually last week's open, pretty close to the open. That's like 67.70 would be an area of interest. To get back short, you'd really need to see a break below the May low day close, and that's 66.98. 66.97. Yeah, there's just... Nazia says, got it. Thanks. Hey, you're more than welcome. There's just not much structure to you. And I was considering this last night, but I'm not really too much of a fan of it. I guess at this point, it looks a little bit cleaner. That would give you support along this region. You'd look for support along the median line, which still takes you into 68. So either way, look for 68. And actually highlights a nice area of resistance, confluence resistance right here. It's basically a 50% retracement from the decline off the highs. And you also have the December high day close at 68.23 into 68.66. Same level that we highlighted yesterday here. I'm sorry, 68.63 into 68.66. Yep. So could be a formation or a slope that we want to follow. Don't want to put too much emphasis on it yet. Do like that nice pivot there, but it would keep you constructive near term alongside that median line. Listen, on these breakouts and reversal trades, you want to be cautious on it. Give it time to materialize. Give it time for it to form some structure before you start to get too heavy on the intraday stuff. From a swing perspective, the breakout out of the deep downside sloping median line formation does give you the focus to the upside right now. Intraday, you're at resistance, okay? You'd look for that pullback towards the median line. Ultimately, we're looking for that stretch towards 68.63, 68.66. All right, any questions on Kiwi before we move off? Sophia, dollar yen, yeah, we're definitely going to go over that. That was on yesterday's radar charts. We'll go over all the radar charts from last night. But before we move off, that's Kiwi dollar, Aussie dollar. This is actually a scalp that we made together in the webinar here, guys, if you don't remember yesterday. And it continued to hold like clockwork. I didn't change a damn thing. The whole thing continued to pan out really well. You got GDP numbers yesterday were pretty strong across the board. For Australia, you did see a slight downward revision for last month's read, but certainly the headline figures and definitely the quarter-on-quarter figures were much stronger than expected. The headline year-on-year basically in line with expectations. So you saw a real strong reaction to the upside right into the yearly open, 72.83. Major key resistance at this point is up at 73.06, 73.07. Nice confluence of a basic 236 off the high and a 1618 extension off the low. Okay, literally they're even to the fractional pip, they're right on. So I was actually looking for this stretch to kind of get that last run into this region. You didn't get it. Failure on the stretch here took us right back below, finding support at the median line. So look, you're still at risk for the rally to fail at the yearly open. I kind of need to see a solidified break through that region. I know that only 20 pips away is the key resistance confluence here at 73. So it kind of puts you between a rock and a hard place in this region. Long story short, you're looking to stay constructive while above or while within this formation, specifically near term while above the median line. Okay, so the way these work, that if you find resistance at the 50 line, the upper quadrant, on the rebound or the breakdown or the recovery, a lot of times you'll find support at the 50 line or the bottom half. So if we do break from here, you risk a drop towards like 72.30, 72.15, that region, of which you'd start to look for a little bit more of a concerted bounce for a move higher in Aussie. I do like it. I do like the near-term bounce here. Again, you're not really looking to anything major as far as resistance. You had that 73.07, and then you have 73.60. Big confluence of basic resistance. The 50 line of the broader formation we've been following, and the high day close for October. All converge at 73.60. So some really nice upside targets that still keeps you within the confines of the broader trade that we're in. Any questions on the Aussie? Now let's adjust some of these levels here real quick. At this point, obviously, this confluence is moot. This 618 gets extended to the new high that we made last night. That takes our near-term bullish invalidation level up to 72.05. Lower median line parallel. As long as you stay above that, I'm looking for a pullback here to get back on the long side. Keep in mind, 72.50 has also been a pretty decent pivot in price, right? It's kind of right along where that median line off the low is right now. And bear with me one moment. I just want to check something real quick. Okay. A couple things I would just highlight. That 72 handle, so that 618 is also the 1618 off this near-term recovery off the high. So it adds further validation, kind of adds a little bit more emphasis to that key region of support being the last-ditch effort, of which if this is going to stay constructive, you better hold that region. Ahead of that, just a basic 100. So if this is, oops, spoke too soon. Okay, scratch that. Scratch that 1618. But a basic 100, if this is going to be just a simple like ABC, simple correction off the high, that takes in 72.25. So I just want to keep that in view. And this 618, not really going to stress at this point. Again, we don't follow fibs blindly. The fib needs to lay on something significant other than just it being there. When it converges on a trendline resistance or support, major high, major low, a high or low day close, things of this nature. Any questions on Aussie? Feel free to take a snapshot, guys, if you want this heading into the U.S. session. Really strong reaction to those GDP numbers yesterday. Keeps this constructive above 72, okay? And that is Aussie dollar. Joe. Yes, sir. Sterling Oz and Sterling Key. Yes, we'll take a look. For sure. Okay, we good on Aussie? Great. A quick run through the radar charts from last night, and then we'll jump into your questions here. First one is Sophia's question here on dollar yen. It was the first one that we highlighted yesterday. So here is what dollar yen looked like yesterday. And basically, what we were talking about here is the fact that we were coming into the weekly open. If you guys remember, we highlighted this last week when we opened up the week on Monday night. We were talking about, look, just to get into the Sunday gap, just to fill the Sunday gap, you would at least need a move into 110.17. I don't know if this is going to turn over, but if we just look at the probability of this thing coming back to fill the Sunday gap, which often is a play, you simply just opened up the market, rallied into a new high, and you've been pulling back to cover that gap ever since. Well, we covered it. Not only did we cover it, we took out the support level that I was looking for a possible long entry. I would have loved to wake up this morning and see that this had held, look for possible longs here onto this convergence of support. It just broke down. Here's what dollar yen looks like right now. It just broke down through everything. So again, 110.17, that filled the Sunday gap. A basic retracement here at 110, it was 110.04. That's right here, basic 236. We came back, we ran through that, we came back, and it held as resistance, and that's the tell. Okay, that's the tell that the break is legit. So the break, test his resistance, continued to move lower, took out targets at 109.46.52 and 109.18. So we've now basically covered all the targets, the downside targets that were in that scalp chart. Beyond here, or where we go from here, is kind of dicey. So here's what I would say. If this is a true break, and it looks like it is, legit break of this ascending channel formation, you've already completed a 38.2. Next targets to the downside, I'd be looking for a soft approach at 108.71, but mostly just a 50 of the entire rally. And it seems to be in a decent area of support here. If you just look at 108.50 into 108.70, you have that gap region there that we filled a couple of weeks ago. What was that? In April trade, mid-April, and just some nice pivots in price on a 50% of the entire rally off the low. Again, this region at this point is moot. Don't need that. And now that we have a little bit more of a concerted high, we could take a look at something like this. Okay, and if we draw that properly, okay. Sorry guys, I'm just going on the fly here. Looks pretty interesting to me. I think I'm going to work with that slope for now just because the top catches it pretty decent. I wanted to see if it was going to be parallel with this basic resistance trend line we've been watching, but irrespective, keeps the focus lower still near term below 110. Okay, so basically as long as price stays below this key region. So last night, remember I said if we got into 110, 15, this is the area, 110, we'd be looking for possible long entries. Well, that's now the barrier for our bearish invalidation level. That's the breach you need to make to get back on the long buys here in dollar yen. And sort of fits in pretty decent with the broader dollar weakness that you're seeing. Do think this eventually uncouples from that, but as it stands right now, or decouples, excuse me, but as it stands right now, I think it's just kind of being washed out with the baby water. Again, big resistance, which is why we start to look lower to begin with. I just didn't think that this thing was going to get a correction of this magnitude. But dollar yen will do dollar yen things. So Looking lower. Still looking lower. Sophia, does that help? Any specific questions, or do you have any open positions on dollar yen that I can help you with? Notes say breakdown here, bearish sub 110. Yeah, we talked about that. All right. Planning to open now, you're asking? Are you asking me, Sophia? I have nothing to do from here. I'm not going to short at the lows, and the recovery would need to give me a decent bounce, at least into 110, to get back on the short side. If not, maybe those swing lows, 109.60, might be a region of possible entry as well. But I don't have structure to the decline from this point, and just from an entry, a trading standpoint, you know, you're right slap in the middle of the quadrant. In fact, let's do this. I bet you if we add the 50 lines, we're basically like right there. We're trying to break below. Does have some merit. All right, we'll leave it for now. But remember, typically a very strong reactor to US data. So I think this one's going to be a doozy heading into ADP tomorrow, heading into non-farm payrolls on Friday. One other thing I want to note, Sophia, is that at the end of the day, this is a basic weekly opening range break. That's it. Here's your weekly open. You made a high. You failed at the highs yesterday's. You rebounded nearly at the lows for the week, and then you finally broke. Not only that, you tested the underbelly as resistance, and that held. So that would inherently leave us looking for a late week low. Okay? So as far as the directional bias near term, that's kind of on its face value still bearish here in dollar yen. Next up on tap from yesterday. So again, we took out all those targets to the downside. Keep in mind soft targets at 108.70, and then 108.50 is going to be that 50% retracement, and that converges actually on that lower median line parallel for the proposed pitchfork we just added. Basically later today into tonight into Asia trade. So not bad here in dollar yen. Moving right along, sterling dollar. Sophia says, what about sterling yen? So sterling yen is very similar as well. We can take a look at that in just a moment. Let me go over a British pound real quick. So here's what the pound looked like. So the pound saw another breakdown of key support. If you guys recall from the previous session, we took out two of the top side targets coming just short of 47.31, which is a 2016 open. And are bullish, or we stayed constructive. We want to stay constructive above 45.88. The actual bullish invalidation, which shifts you back on the bearish side, was 45.33. We crashed through both of those. So sterling's looking like it could fall off the side of a cliff from here. Again, if you check out the previous sterling chart from earlier in the week, started out with a real nice clean rebound off that 45.88 level. This was the first target. We were looking for a rally into the yearly open. The fact that this thing made, and this is where the daily charts become so paramount, guys. We're focused on near-term intraday trading here in these webinars, but certainly you need to get that broader cue from the larger daily picture. And when I took a look back, we made, just on its face, outside of bias, an outside day reversal on a failed attempt at the yearly open. That's as bearish as it gets. You know, the market's looking where the year opened. We're pushing, we're pushing, we're pushing. Not only do we not make it into it, but we make an outside reversal to break the weekly range lows. So again, I can't really signify how clear this break was yesterday. And on that move, you know, sayonara. There's really not much to do on the long side here for the pound. So moving forward from here, the question is, where does this thing settle? I do think that you continue to look lower here, specifically if we close below this long-dated, you know, formation we've been following. Here's what it looks like. Here's that outside day reversal right off the 50 line, like literally on a failed attempt of the yearly open. So a break to the downside here. I mean, from this point, what we want to do is tack on a basic retracement, which you have there on the scalp chart, but just to add it. Just highlight the key levels. 144.11 into 143.97, okay, which is the low day close for last month. That'd be the first area that you expect to see possibly a little bit of a pause. And that's just highlighted here at 144. I just threw a round number on there as a soft target. But looking lower in the pound, essentially you'd need to get back above 45.33 to make any type of effort to get the rally back on track. But looking lower. And the other thing I wanted to check out is just an extension off the high here. See if we got any overlap. Hey, 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 look what happens when you do that. 43 becomes the exact 100 off the high, which is a dead-on confluence with a 50 off the low. Best type of retracements, best type of extensions are these overlaps. And that highlights the 43 handle on slope basically over the next 3 days here. Questions on sterling dollar? Sliding parallel off the lows. Does that give us anything? We need to adjust this slope. Sorry, guys. Give me 1 sec. It is the limitation of the platform we're trading with. By the way, I am beta testing FXCM's new trading platform for them. It looks pretty cool at first glance. I'll give you guys a little bit more information as it comes along, but it's a pretty cool platform. I've been using it for a while now. Integrates a little bit more stuff. Still some issues on the charting side, which I'm working with them to resolve, but just a heads up on that. But highlights, again, initial immediate support right here at 144.11 into 144, and then that major key confluence at 143, sort of be a big region, former basic resistance turned support. All right, again, on its face, opening range break, just like dollar yen for the week, looking for that late week low. Any questions on sterling? So with that in mind, Sophia, right, on the dollar yen and the sterling yen, that's why it puts me in a little bit more of a precarious situation with sterling yen. You'd expect to see that thing would just be plummeting off the side of the earth. It is a much wider range ATR. Obviously, quarter of the daily ATR is still 53 pips. Actually, no, I didn't look at this morning. This is right on track. So look for 56.35, 56.17. Interesting. Very interesting. Thanks for bringing this up. Should I go long at 143, says Pete. You talking about the sterling? Listen, if you want to take a counter trend trade against 43 on a scalp, sure. If the trigger is there, but just know, Pete, again, it's the first day of the month and you're counter trend trading. So tone down your leverage to a quarter of what you typically would trade. And if you see a decent trigger, yeah, you might get a pop-up worth 31 pips. I don't know. All I know is that I would rather look to find that rally to sell. I'd rather always be in the directional trend of the week. And the opening range break here clearly shifted the trend to the downside. You know what I mean, Pete? I don't want to deter you guys from taking counter trend scalps. I used to do that all the time. In fact, I get laughed at in the desk because there'll be a day where there's like a 300 pip drop in a trade and I've been making money on the long side. It's just, you have to stay super nimble, Pete. You can't, thumb the markets and get stubborn with a position like that. You got to be super, super nimble. But yeah, you can find a bounce off 144 or 143. 143 would be a little bit more of a conviction rebound, and I would be looking for long triggers. I'm sorry, Pete. Let me take that back. I thought you were talking about 144. 143, yeah, it'd be an area for me. I'd be a lot more interested in possibly looking for some long triggers as well. That longer dated median line formation held for months and months and months. Resistance, 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 resistance. Wouldn't be too surprised at all the fact that it coincides with both those fibs that you see a little bit more of a rebound. But it is in the context of a broader downtrend, right? So you want to make sure you stay super nimble on those counter trend trades. So that is pound dollar. Pound yen, Sophia. Did that help? Let me go back. I'm not sure. Did I cover the scalp chart? See if I can update this for you real quick. So big resistance. We talked about this earlier, I think. I'm not sure if it was this week or on Thursday. 163.50 into 163.86. Huge region. 2014 low. 1618 extension right off the low. We can get rid of this. Okay. Pete says, yes, great, thanks. Hey, you're more than welcome, Pete. Appreciate that. I'm still just checking this out for possible areas of which you'd start to look for some stringent support here in sterling yen. Besides 56.18 to 56.35, Sophia, that's sort of the biggest area I'd start to look for possible support. Ahead of that, I don't really, honestly, I don't want to mess with it. This is big. It's down here basically. It doesn't come into play until next week. So I think you can see a lot of chop here, a lot of sideways movement, something like this. Maybe a test of resistance, which would be initially at 159.18. It's just a nice area of resistance, pivot in price, 38.2 retracement. You got the 50 there of the advance that we've been following. So we're sort of maybe a rebound there and then a move lower. But broadly speaking, it's a pretty clear opening range break for the week. I'd be looking for a stretch into that weekly low. Again, looking at these formations to kind of give you a tip on what's going on with the broader picture. A, you got a daily trigger break here with that close yesterday, okay, of a multi-month trendline support. B, yesterday's price action constituted a larger outside day key reversal, okay, so into a multi-month high off of resistance. and that is the basic formation we were talking about. This should have been a little bit more on our radar, guys, heading into the start of this week, just because that was such a huge region. I know that we've been talking about that resistance range for a while. If you go back and follow the archives for sterling yen, that was sort of a big region we were looking for as far as that 63.96. We didn't quite get it. The high was 63.88. We were looking for that stretch into 96, which was the low from February. But if you go back in the archives, this is something we've been watching for a while. So sort of look for that pullback into 56.35, 56.15. By the way, quick segue. There is that new search feature on the website, guys, which is awesome because it doesn't only search the updates, but it also searches the raw chart archive. So literally, when you search, Great British Pound, JPY, it's not only going to look up each update and article that we've written, but it's also going to bring up the actual charts. So you can get a really clear picture, real quick updates on any pairs that you're looking at, and specific charts on those pairs. So it's pretty cool. If you haven't gotten a chance to, check it out. Makes sense? Sophia says, what's the target for today? So for today, I couldn't tell you what the target is on this immediate drop. All I can tell you is that I'm looking for this to settle near 56.35. I don't know if that happens today or tomorrow, but that's sort of the initial place I'd be starting to look for some support here on sterling yen. There's really nothing ahead of that, Sophia. It's a basic key 618. Immediate buy stays bearish, sub 159.19. Make sense? Says thanks. Yeah, more than welcome. Yeah, this is the range I'm focused on. If we rally towards this, I'd be looking to sell. Ultimately, we're looking for a drop into this key region. Once we get here, I would be interested in possibly checking out some long exposure or looking for some long triggers into that support region. Pretty clean. All right, so that was a quick segue into sterling yen. Hope that helped. Dollar yen, sterling yen. A quick note on euro pound. She's a doozy too, huh? Here's what euro pound looks like. And another one where we're talking about, the possible play here. Last week when we looked at euro pound, here's what it looked like. Just want to go over this real quick. The major levels of support, we were looking for a 75.65, which constituted an exact 2 equal legs down, confluence with channel support. And the more important region, 75.22 into 77.85 or so. That changed. You got I'm so sorry, 75.22 into 75, I think it was like 20 or 19. Basically, guys, the 200-day moving average, which you see in green here, the 50% retracement, and the lower median line parallel, all in these two regions. So we came into the first 100 confluence, and that gave us a really strong reaction. That rally now breaking a near-term structure, which shifted the focus higher. Here's what it looked like last night. And here's what it looks like right now. Okay, so again, just a basic bisector line here, or a parallel of basic channel, descending channel formation. That purple line represents a 38.2 retracement, 76.63. Once that broke, really validated the break of the weekly opening range, which was pretty objective here as well. Okay, so on that move, you're looking for 76.95, which you got. You're looking for 77.50, which we just got. Next upside target, and I think something we want to pay a little bit more attention to, depending on where we are in time, is this 77.75 level up here, which would constitute a basic 38.2 of the entire decline. Okay, again, one of those trades where I'm just looking for structure to give this a little bit more color on the advance. I don't have it yet. I mean, it's just basically lateral It does highlight the same resistance region we're looking at, but for our purposes, I don't know if it's going to do us too much good. Nice reaction here, but highlights this region any way you look at it. Actually, that's not too bad. Caught those lows too. So before you can say that any material breakdown has happened here, or breakout has happened here, rather, in euro pound, we just got to note that that major key resistance level, basic trendline resistance, 38.2 retracement, upper median line parallel, sort of a region you would start to expect a little bit more of a pullback play here. And there's that dip last week. Real clean, real clean. Francis, I completely agree, and that's 100% happening. That's the next pair we're going to cover. He says, please look at the dollar or the CAD. Seems like the weekly opening range is still holding 100%. That topside break yesterday, Francis, did look to me like it was going to run, but we closed right at the opening range high. So while price action intraday stretched through the opening range high for the week, before the session closed out, we literally pulled right back into the opening range high. So yeah, I think it's still holding the opening range for the week as well. Eileen says all these moves of the breaking pairs seem to have happened quickly and without stop areas. Just need to wait for the settling now and pullbacks. Yeah, Eileen, guys, no one should be surprised, right? This is your classic month open, month close type nonsense. This is why we tend to take a hands-off approach and literally be a lot more nimble, if not flat, into the monthly crossover. Because you get this crazy stuff happening. I mean, look at the pound yesterday. I was watching a 1-minute chart. And if you were watching it with me, as this thing completely broke down, it was like, what the hell is happening? You had no clue. And these things, again, thin liquidity conditions, open interest is a lot less. It doesn't take much for a big market order to really shift things around. You're getting a lot of portfolio rebalancing. So a lot of times, all of these factors converge onto the monthly closes, into the opens. And, a lot of people rolling new positions, whatever, the condition may be, all impacts broader liquidity market conditions. So I'm not too surprised to see some of these erratic changes. That being said, it's unlikely to be over the next couple of days, just on account of the amazing broad event risk that we have on tap, both with the ECB, NFPs, and later this month, you still have the FOMC interest rate decision, which there's been debated nonstop on whether they're going to raise or not. Keep in mind that this is a quarterly meeting, which means we don't only get the interest rate decision and the statement, but we also get the subsequent presser with Janet Yellen and the updated quarterly projections from the individual committee members. So a lot of people are saying if they're going to raise rates, they're going to do it on one of these quarterly meetings. The July meeting will not have the presser, will not have the quarterly projections. So a lot of people are discounting it, saying, hey, they might as well do it this month. So a lot of event risk on tap, very thin liquidity conditions as we open up the market. It is the summer months here, June trade, and just want to be cautious here, guys. The volatility is unlikely to really subside anytime soon. That being said, let's look at dollar CAD. Here's what the daily looks like. Okay, I know we talked about this yesterday. I don't want to beat this to death, Francis, but 29.85, 29.77, the absolute paramount support as long as the trade stays above that region. I still like the long side. That's all you need to know on the daily chart, period. Near-term resistance, look for the high day close, the initial near-term resistance here on dollar CAD, that's 31.20. I know it off the top of my head because we talked about it yesterday. Here's what the scalp looks like. So here's the weekly open, and he's absolutely right. Francis talking about the weekly opening range remains intact. This looked like it was a break, but we closed well below it. And again, if you go to the daily chart, and literally look at the super close, opening, or the high was 30.93. Yesterday's close was 30.91. So literally, we went through the opening range high and then closed literally just below. Puts the emphasis still on that break of the same range. And we actually even noted yesterday, even if this breaks the opening range high, there is that key resistance right there. So there really wasn't much of a play on the long side, in my humble opinion, even from a scalping perspective, on a break of the opening range. The only play that you had was on the data release yesterday when you saw this thing rally right off the weekly open. Okay. This is a slope I was looking at last night to try to see if we find some support. It actually did look like it was finding some support as I went to bed. Didn't have enough conviction to make a play on it, and here we are sort of messing around again. So I'm not really going to stress this formation. I'm really going to just look for a break of this range, guys, 130.20 into 131.20. I know we went higher here on the stretch, but again, that's the high day close for the month, and that's the break I kind of want to see to get this thing going again. Until the range breaks, Francis, that's what it is. I hate to use cliches, but we're in the range until we're not. So 131.20 into 130.20 is sort of the only focus thing I'm looking at for dollar CAD, broadly speaking, with the longer term outlook constructive above 129.77. Francis, make sense? He says, okay. I mean, the way I would look to play it is my favorite. The favored way to play this one is buy pullbacks. I'm not really looking to play the range on the short side. I'd rather be long within this range. So if the breakout happens, you know, I always leave a quarter of the trade left over and the stop at break even. And 80% of the time, I would say the stop takes the break even hit on the quarter of the trade. And I'm okay with that. Why? Because in the scenario when it breaks out, I'm holding that position for another 100, 150 pips. Whereas if it comes back and it breaks even, no harm, no foul, didn't take a loss on it. Yeah, lost, you know, revenue or lost profit, potential profit is a loss, true. But I think you always have to leave a little bit on the table here to try to play the breakouts or try to get the bigger move. And by no means, guys, is near-term intraday like the only type of trading that you want to focus on. It's good to have a diverse palette. So I'd rather be playing the long even within the confines of this range. All right, and that is dollar CAD. I want to jump into the questions we had earlier. I think it was Joe looking for sterling Oz and sterling key. Here's what sterling Oz looks like. Recently put a piece on this, didn't I? Nope. We've just been looking at it in the webinars here. We covered it yesterday, it looks like. Here's the last 30-minute chart that I presented. All right. So it's basically the same trade here. I actually did shift the slope to the downside. This is from way back on the 23rd here, guys, but that ended up being pretty much the high. Let me take this back. So I think this is the formation that we added here in the webinar together yesterday, right? It looks like the median line gave you a nice little bounce and break. Gives you support just lower from where we are right now. Are these correct levels? Yes. Yeah. Stay bearish below the median line. Bearish invalidation would need to be a break back above the yearly open. That's basically right around the 202.07 level. Right around here. Look to sell rallies into that if we break above this region I'd be looking for possibly for a continuation higher in the pair. But it's been a pretty wicked start of the, even from April, I guess, the beginning of the rally. Major, major run here. Joe, that's a quick update from the levels that we put on yesterday. Any specific questions on this? Feel free to take a snapshot, by the way, if you need. What was the other one that you needed, Joe? Sterling Key. I don't know if I have anything on Sterling Key. Let's take a quick look. Sterling Key. He says, okay, got it on Sterling Oz. Right on, brother. Sterling Key. All right, I'll tell you one thing. Just off the top of my head, a break below 215.30, 215.12, that sort of puts me really bearish. There's a lot to look at there. You have a basic 236 at the stretch off the highs, which is not the big deal, but it is the December low. It's the opening range low that a lot of people would consider for the year. So typically, if you're looking at yearly opening range lows, it's like a January, February stretch. A lot of people, you'll hear people talk about the January effect or things of that nature. That's basically opening range is what they're talking about. As January goes, so goes the year, right? So in any event, here's the January opening range. The February opening range essentially gave you the same opening range low for that month and broke the high for March, held there. And I know we've been dilly-dallying there over the last couple of weeks, but long story short, this definitive break, specifically on the confluence of the median line there, certainly shifts the near-term focus lower, any way you look at it. Now in momentum, it looks like you had a trigger break here as well. Haven't really been following this one as much. So let's see if we can't put something together here for you, Joe. A decent trigger break there. And okay, I'm not going to really need that right now. Okay, let's jump in. Ooh-wee. Puts us at support basically right here. Maybe a little bit more lower to go here, but near term, you are coming into some support I'd be looking for. In fact, if we take it from that stretch high, it puts you basically at support right now. Near-term bearish invalidation. And here's the thing with this, Joe. So you're putting in some lower lows here in momentum. as momentum is starting to give you some divergence, right? Obviously, these divergent signals, as we always say, sub 30 and above 70 tend to be your weakest signals. Those are not signals that you want to put heavy emphasis on. You still want to recognize them, though. It's just not something I would basically, put money on. So long story short, look for a trigger to the upside here. I would like some recovery. Best case scenario, you sort of get a rally into the median line here that you can sell. Couple things I want to note on this. A, don't underestimate the rally that you could see in the Kiwi. It's been under a lot of pressure, and it's seen a big downside push. And B, much wider range ATR, right? Quarter daily ATR here is about 60 pips, 59. So this is one of the largest ATRs ranges that we can trade with. Gives us great profit potential, don't get me wrong, but it's a double-edged sword, Joe. So just use a little bit more caution. I love trading Sterling Oz. I was really all over that a couple weeks ago. Sterling Key I haven't really been involved with for, it's been a long time. I can't even remember the last time I put a trade on this. But this month, guys, all the Sterling crosses will be in focus. Don't you worry. We're going to be knee-deep in every Sterling cross, especially heading into the referendum, because I do think that inevitably when the wits come about, everyone, and we finally clear out some of this noise, the Sterling crosses will have a lot of volatility in them. So we will definitely revisit all the Sterling crosses. But near term, I've been watching for some support here on Sterling Key. All right? Make sense, Joe? He says, okay, great. Thanks, Mike, for the update on both. Hey, you're more than welcome. Guys, that puts us into 9:30. U.S. markets are just kicking off, so I'm going to go ahead and wrap things up here. Remember a couple of things. Obviously, we have Mr. Jamie Setley, my good friend and partner, who will be on today at 1 p.m. Eastern for the midweek strategy webinar. Again, going over some of the swing trades that we're involved currently right now and his outlook for a little bit more of a longer-term positions on some of these majors. Start of the month, stay nimble, do yourself a favor. Let's clear out and get some more market participants here as we get deeper into the week and a lot more significant event risk. ECB's on tap tomorrow, so real quick, heading into the ECB interest rate decision, I'll give you an update later tonight. The euro dollar is knocking on the door for resistance, okay? And that resistance is basically 111, 87. We've talked about this region for a while. There's been no change to the latest euro-dollar scalp chart, so you can find that on SB. But watch that near-term resistance in the euro-dollar on a rally towards the median line. That's really what you need to clear, in my opinion, to get this thing going to the upside with a little bit more fervor. Keep in mind, you got the trigger break to the upside in momentum, and we're holding 40 as support. On its face, this would be looking for a near-term recovery. All right. Best of luck trading, guys. We will see you tomorrow morning. Cheers.